Good morning. Brian Hale with Mortgage Advisory Partners. It's Monday morning, March 25th, and above is the link to our weekly newsletter, as well as a link to subscribe to the newsletter. As I remind people every week, the newsletter is free. Again, our subscriptions continue to surge forward, and we appreciate the support from everybody who has subscribed. This week's newsletter talks about the fact that the Fed was surprisingly calm this week and on inflation risk in general. And the reality is this week showed some data where home sales have actually improved, including existing home sales being up over the 4 million annualized number for the first time in really several months. So we saw a little bit of a pop back in home sales. Although with rates having gone back up over the last 2 months, I'm not sure that number will hold, but here's hoping. In addition to that, the newsletter talks about the fact that last week's data really focused around the Fed's meeting on Wednesday and something known as the dot plot. And the dot plot is simply a graph that charts out each of the Fed members, the members of the Fed Open Market Committee, where they believe interest rates will be expressed as the Fed's fund rate at the end of each year. And so right now, the dot plot is comprised of 2004, 2025, and 2026. And interestingly enough, although we've seen increased inflation data over the last couple of months, and we've seen rates go back up, when comparing what the Fed governors thought, or the folks of the Fed Open Market Committee thought just a few months ago, and what they think now, it's the exact same number. They really haven't moved off where they believe rates will end in 2024, but they have moved off the number of rate cuts in 2024. So that's, it's a pretty interesting stat given where the data has been over the last 2 months. In the news conference, Fed Powell basically said that he sees the last 2 months as being somewhat of a seasonal aberration. And he expects that the continued improvement in inflation will return, and they'll continue to make good progress in inflation. So no immediate cause for alarm. There was some discussion that, the Fed could have been looking at a rate increase last week. Obviously, they didn't do that. And we saw an approximate 10 or 12 basis point improvement in the 10-year Treasury between Wednesday and Friday afternoon. This week is going to be a pretty quiet week in terms of data. The data coming out this week mostly has to do with home prices and home sales. The Case-Shiller home price year-over-year inflation number expected to be about 6.8% versus 6.1% in the last reporting period. In addition to that, on Thursday, we get Q4 GDP, which is expected to be about 3.2%, down from the previous period of 4.9%. And we get Fed core PCE inflation on Friday morning as well. Although those are probably not going to be as significant to the marketplace as the data coming out in the first week of April, which will of course include the March jobs numbers, which is always significant in terms of moving the markets. So again, this week, fairly limited data, housing, GDP for Q4. Also, I think consumer sentiment comes out on Thursday as well. That could give a little bit of a sense as to how consumers are thinking about the market, given the inflation that they've witnessed over the last couple of months. And again, core PCE inflation numbers on Friday. So with all of that said, I remain personally fairly bullish, especially on the second half of this year. There's a lot of suggestions that mortgage rates will not be below 6% by year end. I'll go out on a limb and say I personally think they will be below 6%, although maybe only in the high fives. But I think any movement that gets us a 5 number at the beginning of a 30-year fixed rate mortgage is probably the trigger number to begin to move listings and to bring inventory back into the market. As I've said in the past in this space, there's really no shortage of demand. There's been a shortage of inventory, therefore a shortage of transactions. And really only the home builders who have as much inventory as they can build are really profiting from that part of the process. So with all of that said, I encourage you again, in this post is the link to this week's newsletter. If you subscribe, you would have already had this week's newsletter this past Friday. You'd have it in time for the weekend to talk to your customers and clients. In this week's newsletter, there's some great charts that kind of explain the dot plot process. They show a comparison of the last period versus this period. And you can see in there what rates are looking like in 2025 and 2026. And it's a really exceptionally bullish story. They expect Fed funds rate to be down maybe as much as 200 basis points by 2026. So I continue to be really bullish on the marketplace and on the industry, but I also believe that the balance of 2024 is still going to be a very difficult year. And I can see that just in the consulting work that myself and my partners within the organization are focused on. So with all of that said, I wish you all a good week this week. Two things I mentioned last week. Continue to pay attention to this space, particularly on LinkedIn and all of our social media, for some announcements coming up over the next 30 days. We'll be making some significant announcements in this space regarding a project I've been working on to begin to help people, particularly mortgage salespeople and branch managers in the industry. There'll be more on that coming up a little bit each week on this going forward. And when we're ready to make the final announcement and launch the project and the process, you'll be the first to know about it. So again, encourage you to subscribe. Last but not least, right below this post is a post that Dave Savage and I did, Dave Savage from Mortgage Coach Trust Engine. We did a short video last week just to catch up on a request by some of his followers, folks who follow Dave and Mortgage Coach on his weekly calls. They had asked kind of to get my opinion or to hear my opinion on some of the changes that have happened, reports that came out from the Mortgage Bankers Association regarding profitability or the lack of profitability in mortgage operations in the fourth quarter of 2023. So when you get done watching this, you may want to watch that video as well. But most importantly, remember, you should subscribe to our newsletter. And I hope to talk to you all again soon, and we'll talk to you again next week, if not before. Take care and have a great week.